Would you like to know what the most recent developments are regarding Tesla and where it stands in the market for electric vehicles? We'll talk about a lot of amazing news in this video, enough to turn even the largest Tesla bear into a full-fledged bull. Prepare to explore in detail Tesla's recent price reductions for the Model S and Model X, the company's intentions to lower the price of its upcoming model generation, and the effects these will have on rivals. We'll also talk about Tesla's potential for expansion, its cutting-edge technology, the supercharger network, and its profitability in 2022. We'll examine more closely at the reasons why Tesla supporters are still optimistic about the company's future as investors argue over whether or not to purchase Tesla shares. However, before we go any further, allow me to beg that you all please subscribe to our channel and remember to give this video a huge thumbs up. Well, let's get started. As the business lowers the price of the Model S and Model X for the second time this year, Tesla's stock is down approximately 1. Many had anticipated a major unexpected revelation, but this did not materialize. Tesla currently seems to have better news despite a difficult few months and an unsatisfactory Investor Day in early March. Many people may have been optimistic following Investor Day due to the company's affirmation of its goal of 20 million deliveries by 2023, which would give it a 24% market share. Shareholders and enthusiasts of Tesla are ecstatic about this news. According to a recent Wall Street Journal article, Elon Musk's cost-cutting goals at Tesla are placing pressure on the company's electric vehicle competitors. Given this, GM, Ford, and Volkswagen are being questioned about their attempts to reduce the cost of next models. Tesla has declared its intention to use cutting-edge production processes in smaller factories to decrease the cost of its upcoming generation of automobiles in half. Elon Musk, the CEO of Tesla, and other executives claim that these modifications might result in a new generation of cars costing about $25,000. The next generation of cars were expected to be unveiled at a formal product unveiling, but Musk stated that investors would not be able to see them until then. Although Tesla hasn't yet produced a car for $25,000, the business has gradually reduced the cost of production, bringing down the price of several models by thousands of dollars. Although conventional automakers like Ford and General Motors have recently made millions of dollars on electrification investments, investors doubt they will be able to match Tesla's profitability and cost effectiveness. Elon Musk, the CEO of Tesla, seems to have a natural propensity to make almost ridiculously ambitious promises that put the industry as a whole and himself under strain. He's aware, though, that even if he just meets half of his objective, it will still revolutionize the market and provide him a significant competitive edge. Moody's Investor Services just gave Tesla a Ba3 rating with a stable outlook. This increase is in line with Moody's prediction that Tesla would continue to be one of the leading producers of battery electric vehicles with a growing global footprint and extremely high profitability. Governance factors such as Tesla's responsible financial practices and management's demonstrated operational success are also taken into account in this upgrade. Notably, since the Model 3 entered the electric vehicle market in 2017, Tesla has expanded considerably since opening a plant in Shanghai and releasing the Model Y. Tesla has been actively increasing output at its gigafactories across the globe. The business is currently raising output in gigafactories Berlin and Texas in 2022. The number of employees at Tesla's newest U.S. production site, the Texas Gigafactory, tripled from the previous year, according to an annual compliance report submitted by the firm with Travis County, Texas. This was a component of a greater 23% rise in the overall number of employees across all Tesla facilities, as stated in the January SEC filing. Despite a pattern of layoffs in the auto industry, Tesla experienced a significant rise in full-time staff from the prior year, adding 28,565 more people by the end of 2022 to reach 127,855. It is anticipated to deliver the Cybertruck this year and has begun constructing the Semi. Tesla intends to open a gigafactory in Mexico, which will increase the company's global footprint once more. Regarding ratings, Moody's has given Tesla a Ba3 rating, placing it in the investment grade range. The Ba3 ratings indicate that Moody's thinks Tesla has modest credit concerns, placing it in the long-term investment grade category. In the generic rating category, Tesla's Ba3 rating is at the bottom. Tesla is a well-known leader in the electric vehicle and a significant player in the market for battery electric vehicles. With its Model S, Model X, Model 3, and Model I cars. It competes in the luxury, automobile, and crossover SUV markets. The business uses roughly 4 of sales to Fundride in an effort to lower production costs and enhance its industry-leading technologies. As EVs gain popularity, investors are drawn to Tesla's growth potential. In 2022, Tesla opened 2 new plants in response to the increasing demand. Over the coming years, the company intends to sell new cars, including a sports car, light truck, semi-truck, and reasonably priced sedan and SUV. As everyone's aware, Tesla has made a name for itself as one of the world's top producers of electric cars and EVs, with gigafactories and production facilities located in Texas, Berlin, and Shanghai. The business has also started manufacturing the Semi, and this year's delivery of the Cybertruck is anticipated. With the Gigafactory in Mexico set to open soon, it is anticipated that Tesla's global footprint will also increase. Given that it is categorized as a long-term investment-grade issuer, Moody's Battery rating suggests that the company has moderate credit risks. Given that established automakers are starting to invest extensively in EV development, which could lead to increasing competition for Tesla, investors are discussing whether or not Tesla stock is a good investment. Notwithstanding these reservations, supporters of Tesla think that the company's EV, autonomous driving, battery, and solar power systems technologies have the ability to upend the car and electricity production sectors. The best functioning sector of any EV on the market is made possible by the combination of Tesla's industry leading technology and the exclusive supercharger network at a price to earnings multiple of 55. Tesla's stock is currently costly yet historically cheap for the firm. Investors are paying for quality, as seen by the 30% increase in revenue and the 32% return on equity. Tesla has demonstrated its willingness to adapt to heightened competition, as evidenced by its recent announcement of price reductions on a number of its models, particularly in the Chinese market. Those who purchase Tesla shares now with a long-term investment strategy will probably reap rewards as the business increases production and keeps its position as the leader of the expanding electric vehicle market. Considering that operational income for Tesla increased to $13.07 billion in 2022, the company's profitability for the entire year is noteworthy. As a result, Tesla will have greater room to maintain low pricing, grow its market share, and reduce its dependency on outside funding. With a $623 billion market capitalization, it surpasses the combined value of all other American automakers, despite being higher than its conventional competitors. Tesla's projected price-to-earnings ratio of 48 is still fair given the company's potential for development as a pure-play electric automaker. Tesla's leadership anticipates a 50% compound annual growth rate car deliveries over the long run, which might result in notable increases in revenue and profit. Even if the price of Tesla shares has increased since the beginning of 2023, long-term investors still believe the company is worth investing in. A long-term investment plan is essential for generating steady profits in the stock market, despite the opinions of some analysts who contend that investors may have lost out on the opportunity to purchase the company at a cheaper price. Several analysts maintain that Tesla is still the market leader for electric vehicles globally despite increased competition. The company's advantages include self-driving technology and good margins due to its vertical integration. The buy ratings on Tesla stock were upheld by analysts from Bush, Mizuho, RBC Capital Markets, and Jefferies, with price targets ranging from $200 to $230. Model 3 and I should continue to grow across traditional segments thanks to ongoing product enhancements, while growth may be unstable due to dynamic pricing. Overall, Tesla's valuation is justified by its projected growth and profitability, as well as its distinct position in the electric vehicle industry. Even while there are others who contend that Tesla may have lost out on a favorable price, long-term investors could still benefit from purchasing Tesla shares. That brings this news concerning Tesla to a close. We really hope this was helpful. Please remember to subscribe and give this video a thumbs up if it was. We appreciate your time, and we'll see you in the upcoming video.